Do we have everybody? There's Andrew. I think, Andrew, you might need to click your speaker button. There he is. We got everybody. Excellent. All right. Well, welcome back. Here we go. On to the next one, Strategic Bitcoin Reserve Summit 2025. So in this panel, we're here to talk about institutional Bitcoin adoption and lessons learned. So on the stage with us today, we have Andrew Hohns and Matt Hougan. Andrew is the founder and CEO of Newmarket Capital and Battery Finance, and Matt Hougan is the Chief Investment Officer at Bitwise Asset Management. So we've got a very interesting panel here to talk about a little bit of traditional finance, some of the changes that we're seeing in the landscape, and how people are starting to view Bitcoin as an institutional grade asset. So this panel is aimed to identify, some of the lessons learned along the way, given that, this is a very quick and evolving landscape, and everybody's been, everybody on the screen has been participating in Bitcoin and working in Bitcoin for a significant amount of time now, and everybody's been learning as we go. So my first question to you guys, going to kick it over to you. So in working in the Bitcoin landscape and working with some of these large institutions and some people in traditional finance, what was one thing that you had thought going into working in the space that is maybe different now, right? Did you have any preconceived notions? You thought it was going to be like X, or you thought adoption was going to happen super quickly? And how's that changed? And, where's that thinking today? So I'm going to kick it over to you, Matt, and we'll take it from there.
Oh man, that's a great question. First of all, it's great to be here, Jeff. Andrew, good to see you. Three things come to mind when you raise sort of reality versus expectations in terms of dealing with institutional investors over the last 7+ years since I've been at Bitwise. Maybe the first lesson I learned was that risk matters just as much as opportunity. Coming into Bitcoin really as a full-time position, very excited about the upside opportunity, but definitely a consistent message from institutional investors was that the risk element was just as important, or probably maybe twice as important as the opportunity element. One of the reasons I think we're seeing true institutional adoption at scale right now is that Bitcoin has specifically eliminated risk after risk after risk after risk over the last 7 years, whether that's custody, trading, regulation, or government risk. And so the reduction of risk has been a big element. And then I think I underestimated the anchoring bias that most people come into Bitcoin with. I think many traditional investors first encounter with Bitcoin is through a negative news story or a negative event. And as a result, you have to convince them not just that there's a 51% chance that this is a systematically important asset, the greatest investment opportunity of all time, but something like an 85 or 90% chance. That was another lesson from institutional investors. And then a personal lesson, I think I underestimated Bitcoin when I first joined Bitwise. Obviously, I was extraordinarily optimistic about the direction of this market, or I wouldn't have left ETFs, a very fast growing area, to focus on crypto full time. But as I dug deeper, the scale of the opportunity and the potential has only expanded for me personally. So those are three findings for me.
And Andrew, I'm curious to hear your perspective, because you've got a bit more of a structured finance, like credit lens. Matt's coming from this ETF background, and now you've got this structured finance background, which is both traditional finance, but very, very different. So I'm curious to hear your perspective.
Well, I would first just thank you both for the opportunity to be here on the panel. Matt, it's great to see you, and Jeff, it's a pleasure. I guess I would say two things. The first is that I think that Bitcoin and Bitcoin-related asset management strategies, value-added especially, are the most promising and likely fastest growing segment of the asset management industry for the next 5, 10, 15, 20, 25 years. And when you think about what a firm like Apollo has achieved in the private credit space over the last 30 years, nurturing and supporting and evolving that market over time. And now it's a huge market and it's on the tip of everyone's tongue. That's a future that we can foresee with Bitcoin, and probably a little bit sooner than a 15 or 20 year or 25 year time frame, because digital things move faster. But the interesting observation, your question was, what's a surprise? And to me, one surprise is that, Bitcoiners are everywhere. We all know that. You might run into your Bitcoin, you might run into somebody who's involved with the network at a local restaurant or a bar, or even, a boutique in your neighborhood, or a dry cleaner, or your lawyer, or whatever. You make new friends, and it's across all industries and all geographies. But one thing that I personally have been a little bit surprised about is that there have not been more Bitcoiners that have so far revealed themselves within the ranks of large institutional investors. And I know that they exist because I've talked to some of them. I know that some people are like, look, in my PA, I have Bitcoin, but our institution is not yet ready for it. But, Bitcoin inspires courage. It inspires people to act, and inspires commitment as well. And so I think that definitely, with a lot of the elements that have unfolded over the last few months, especially at the federal level, and all the state different strategic Bitcoin reserves and all of the other initiatives, we're going to see more and more people coming out of the woodwork, and they'll be driving a ground up interest, let's say, in Bitcoin at their institutions.
Yeah, fascinating perspective, right? So a general theme here, right, is Bitcoin is being de-risked, and it's continuously being de-risked, and the folks operating in the traditional financial landscape, or even the Bitcoin landscape, are seeing this element of de-risking over time. It's fast growing, it's novel, the asset's only been around for 15 years. So I mean, Andrew, to your point here, what are some additional hurdles? You've got some of these traditional finance institutional managers that have Bitcoin in their personal account. What is the biggest hurdle for future Bitcoin adoption for institutions? I mean, we know that it's hard to get the conversation of Bitcoin past the board, but like what is it, right? We've got now large companies like Strategy holding $45 billion of Bitcoin. You've got the U.S. government talking about a strategic Bitcoin reserve, where they've approved a strategic Bitcoin reserve, and this landscape is evolving. We've got over 150 publicly traded companies that hold Bitcoin on their balance sheet. Where are we going, and what's the biggest hurdle? I'll start with you, Andrew.
Well, I think that you really mentioned a very key one, which is the structure of group decision making within the context of investment committees and the processes that surround them. And anyone who hodls has experienced firsthand how the highs and the lows of that over the course of a few years or a few market cycles. And then but that's when you have like an investment committee of one, and you don't necessarily have to meet every quarter and publish your own personal investment results in the local newspaper. But then, if you get married or something, suddenly you have an investment committee of two, and people have different ideas about that. And you've seen some of the tweets on, X about, different priorities. But if you project that onto an organization that has 15 people, some of which are state senators and state representatives, others of which maybe are the representatives of a public sector employee union, and some people at large. And they're coming at it from different perspectives, different geographies, and all of their work is then in high public awareness, because the local business newspaper is breathlessly covering the outcome of the meetings. And that entity, let's say they put on a 1% Bitcoin position, and then the Bitcoin triples. That wouldn't be really surprising in Bitcoin terms, but it's almost guaranteed that that entity is going to trim the position. And if the Bitcoin doesn't triple, if instead it goes in the other direction, it's almost guaranteed that they would exit at a loss rather than hold on. And so being able to square the medium to long run view on Bitcoin with the institutional reality of quarterly reporting and all of the other elements of being a large institutional investor, I think that that's probably a real driver, and that drives certain behavior. But at the same time, that's why I think that certain approaches, like for example, integrating Bitcoin into different asset allocations, thinking of the Bitcoin as a tool, being able to articulate medium to long-term views on the Bitcoin, using its volatility to reshape other asset outcomes. That's where I think that we can indirectly build up to a significant amount of Bitcoin across these institutions. But my base case is that we have a 2 or a 3 cycle adoption curve for 50, 70% of institutions. Most institutions will have a basis in Bitcoin above $1 million.
By what year?
Over the course, I mean, I think that Michael Saylor has put it brilliantly, which is that between now and 2035, we're aiming toward 99% of Bitcoin being issued, and between 2035 and 2047, it's 99.9. So I think that, me personally, I think the rubber really meets the road with the long-term monetary depreciation themes and a lot of what's baked in the cake as we're approaching the early 2030s with Social Security and Medicare. And there's going to be a lot of monetary inflation between now and then anyway, as well as a variety of fiscal stimulus, defense, onshoring, reshoring, et cetera, all of which are going to promote more inflation. And then you have all these adoption use cases for Bitcoin. So for me, the next 5 to 15 years is prime time. And between now and the next 3 years from now, you'll have a handful of early movers in the institutional world, which probably means something like 10 to 50 large institutional accounts over the next 3 years, and then 250 to 750 in the following 3 years. Something like that.
Yeah, I love that. I'll jump in with my own view, Jeff. I think that's exactly right. I actually think it's just a passage of time. I think a lot about pattern recognition, and when I look at what's happened in crypto, in the places that we've gone from idiosyncratic individual Bitcoiners to true institutional progress, they all follow a similar framework. Like look at what happened in the custody space. It was small crypto focused firms, and then it was idiosyncratic family run firms like Fidelity, and soon it will be Bank of New York. Look at asset management. It was firms, like Bitwise, and then family run firms like Van Eck, and then it was BlackRock, and soon it will be everyone. Look at trading. It was, Coinbase, and then maybe it was PayPal, and then it's Robinhood, and soon it will be Fidelity and everyone else. And I think you're seeing the same thing, whether you look at corporate adoption or traditional institutional adoption, right? It always starts with 1 or 2 folks who are willing to stick their neck out, or idiosyncratic Bitcoiners who are willing to do it. We've seen that in the institutional space. And then it will expand to a more broader set. And then eventually it will be everyone. The time frame that Andrew laid out of like the next 6 years, I think is a reasonable time frame. But the important thing to remember about that is they have to buy so much Bitcoin. There's no Bitcoin for them to buy. They have to buy hundreds of billions of dollars of Bitcoin just to get to a neutral position. And I really just think it's a passage of time. Every example I can think of follows this pattern from idiosyncratic Bitcoiners to everyone. And I don't see why this won't follow the same pattern.
Yeah, and Matt, you had this tweet yesterday, which was fabulous. Is Bitcoin has outperformed the S&P 500 over the past 1, 2, 3, 4, 5, and you went down for 14-year periods, right?
That was great.
So, I mean, we've got the performance history, and it takes a little while for people to understand that this can continue to go on because of the architecture of Bitcoin as an asset class. And I think, many people would see that tweet in the traditional financial world and say, too good to be true. There's nothing like that has ever existed before. And you kind of have to break your existing reality of what an asset is, because, I mean, as Andrew pointed out here, you've got this anchoring bias where if the Bitcoin performs well, you trim it, you sell the winners to buy the losers, and in the concept and theory of diversification. However, that decision making fundamentally misunderstands the asset class itself, in that it is savings technology, and it's a new ruler, right? It's a new way to gauge a different form of assets. It's a new I guess a way to account for wealth in savings tech. So fascinating. Thanks for the perspective there. The one of my next questions is, right, can this truly work for every business? Like, should every business have Bitcoin on their balance sheet? And what does that look like? I know many people that may be watching this say, it's too volatile, or I don't understand it. And I guess my question is, should they spend time to understand it? And is it worth, how much time do they need to put into it to understand it? And can it work for everybody?
Yeah. Do you mean from a business corporation perspective, or
Yeah.
yeah?
Yeah, like a business corporation perspective, right? How can this be valuable for a business? I think a lot of people have this personal asset mindset. When they look at the world of crypto, they're like, oh, I could buy it on my brokerage account now. And they're not necessarily thinking about it as a strategic asset for a business or a corporation. So
Yeah.
like, can it work for every corporation?
I think it can work for corporations that have excess cash. Obviously, if you're struggling to pay your monthly bills, you don't have space to put any sort of investment on your books. But for companies that are sitting on cash, and corporations are sitting on record amounts of cash, um, and have been for multiple years, that cash is objectively losing significant value over time. And so I think, just from a pure protection perspective, it can make a great deal of sense. But it can make a lot of sense in other factors as well. We talk to a lot of companies that put Bitcoin on their balance sheet, amongst other reasons they do so, even beyond just the savings technology piece, is expanding their affinity with a large group of individuals in the world. I think that's a real factor. It provides a hedge against excess shorting of publicly traded securities. It makes stocks more difficult to short, which I think is an important additional factor. And so, yeah, I think it can make sense for a lot of companies out there. I think we've barely cracked the surface in terms of corporate Bitcoin adoption.
So yeah, so really early in the general landscape of corporate adoption, right? You've got 150 publicly traded companies out there, but
Yeah, just to emphasize one thing, you have 150 companies that bought Bitcoin at a time where accounting standards required you to enter it at book value and only ever write it down. So you had 150 corporate leaders that literally put their necks on a chopping block for an asset that can only go down in value.
from an
I
accounting
thought
perspective.
From an accounting perspective,
Yeah.
exactly. Like the way the accounting laws work, you could never write it up if it went up in value until January 1st of this year. That's why I look at those numbers, 150 corporations, and think this will almost certainly triple in the next year or two, because now accounting standards have changed. Now you can value Bitcoin at what it's worth, which sounds so ridiculous to even say, but is true. Until January 1st, that wasn't true. You can only ever write it down. So I really do think it's a down payment on where we're going.
I think that there are two elements to comment on, please. The first is, and I'm sure that you guys have read the reports that River has put out about small business adoption of Bitcoin on their network, and what they're seeing with everyday businesses that are adding Bitcoin to their balance sheet. And, people have resources within their businesses. I'm not talking about publicly traded right now. I'm talking about, just a private business, could be a small business, medium, even a large business. People have resources, and then they contemplate over what horizon do they need those resources. Do they need them all available within the next 24 hours? No. Do they need them some available within the next 2 weeks or 30 days for working capital? Some for the next 6 months, some for slightly more strategic objectives. And you could think of it as kind of like a layer or a series of layers of liquidity. And just like you might go to the bank and take out a 4-year certificate of deposit, and you're happier with the higher yield, but you don't have access to the cash until 4 years. Bitcoin very famously, I think a lot of people are thinking about it in the context of the 4-year cycle. And that's a good way, in my opinion, to conceptualize it. So if you have some layer of capital within your business that you could say, except under very unusual circumstances, I can take a 4-year view. And that might be with 5% of your uh, liquid resources, or 10% or 15%, depends on the working capital needs of the business and the availability of finance otherwise. If you can say, I can take that kind of view, then to me, it makes sense there to buy some Bitcoin with that. And you don't have to hold it for 4 years because it is liquid, unlike a CD where it would be very difficult to exit. But if you have that mindset and you're willing to weather that volatility, that enables you to level up in a really interesting way. The big thing, of course, is that people are scared of the volatility. And, but it's only volatile if you measure it in dollars. If you and the dollar is extremely volatile because it has no upward bound. If you measure it in Bitcoin, well, it's not volatile at all. But if you measure it in gold, it's much less volatile. And if you look at that website, I think it's called pricedinbitcoin21.com. It's an excellent website that produces, short, medium, long-term returns of Bitcoin against like 140 different cross-asset comparisons, stocks, real estate, precious metals. And it's just fascinating to see. But, one thing that I will mention is that on the FASB, which was coming up just a few minutes ago that Matt brought up, I think that will unlock more corporate engagement because you're going to start to see a really strong earnings growth for companies that add Bitcoin to their balance sheet on an EPS basis. And that's going to be self-fulfilling algorithmically. The algorithms will buy those stocks because the EPS results are just going to be off the charts. And of course, Jeff, nobody covers this better than you do with True North. At the same time, though, I think that we can also anticipate, like at some point in the future, a Bitcoin-driven earnings recession, where companies that have added Bitcoin to their balance sheet and the Bitcoin reaches, one of its local peaks, let's say, then starts to come down because it gets ahead of itself, which Bitcoin has sometimes a habit of doing at peak moments, and then it starts coming down, and then you might see like such significant reductions in the EPS that I can almost envision a headline at some point in the next 5 years. Oh, Bitcoin has caused this big recession. Bitcoin is the culprit, for the inflation and that kind of thing. So I think the FASB rule change will have, positive and negative effects. And it's something that we should stay tuned on for the next 5 or 10 years before we tell the final story.
Yeah, absolutely. And you see this in Strategy's balance sheet. If you look back at their earnings over the last 5 years, all of their earnings reports have been negative, even though they're one of the largest holders of Bitcoin on balance sheet. They've got 530,000 Bitcoin now. And last year they had a $12 billion gain. But if you look on an accounting perspective, it looks like they had, a $1 billion loss. So being able to mark that Bitcoin to market, it will, open the eyes to the traditional financial world of how powerful this asset can be on the balance sheet. I think just looking at Tesla the last quarter, I think the only reason they had a profit in Q1 or Q4 of last year was because of the 10,000 Bitcoin that they held on balance sheet, which pushed it up. And that's because of the adoption of FASB fair value accounting. So, I mean, both huge components in the evolution of Bitcoin as an institutional grade asset. I mean, Andrew, you've helped me reframe my perspective over the last year of Bitcoin as a duration asset. I mean, you hit it nail on the head, right? If you could start to think of this as a 4 to 5 year asset that you hold for an extended period of time, that's also just happens to be incredibly the most liquid asset on the planet. You can start to be a lot more creative with the securitization and the different products that you can build in the market. And maybe we'll end on that. We've got 4 minutes left. I know both Matt and Andrew, you guys are both working on creative products in the market that are securitizing Bitcoin and using Bitcoin in a slightly different perspective. It might be helpful to just do a quick minute on where you think that's going, because it's going to be really valuable for both people and institutions alike.
Go ahead, please, Matt.
Well, I mean, I agree with something Andrew said earlier, which is I think this will be one of the most exciting and fast-growing areas of asset management for a very long time. I think you're going to see a lot of shots on goal beyond pure beta Bitcoin exposure, and we're certainly working on some of those at Bitwise. Some are as simple as trend or vol reduced exposure, which makes sense for some people, but many are focused on generating income off of their existing Bitcoin holdings. I think that's going to be an enormous area of growth. There are a lot of people who hold Bitcoin and don't want to sell it, but do need to generate some amount of income, or simply can generate some amount of income. And there are various approaches to that, from option overlay strategies to lending to sort of emerging staking environments and other aspects, which are more or less interesting depending on which one you look at. But Bitwise is certainly focused on that. We work with a lot of institutional clients to help them generate yield on their Bitcoin in various ways. And I think it's just a massive growth area.
Absolutely.
Well, business-wise, Jeff, and Matt, it's been a pleasure to be on this panel with you. Thank you. Business-wise, at Battery Finance, we're focused on specialty finance in Bitcoin by integrating Bitcoin as an additional source of collateral in traditional financing arrangements like commercial real estate, project finance. And so for Bitcoiners out there who are looking to obtain stable long-term financing supported in part by their Bitcoin, but also traditional assets, please reach out. For asset owners that want to redenominate some of their equity in out of fiat and into Bitcoin in assets that they know and like multifamily apartment buildings or other cash flow generating assets, please reach out. But there are just two questions in the chat that I want to pull out and give the audience some direct feedback with this last minute. The first is the RWA point on banks, which I think is very interesting. Clearly, some banks are starting to embrace Bitcoin, and Teza put a little bit on their balance sheet, very small amount. But the regulatory structure for Bitcoin, for that matter, for gold, is not very good. Now, with a pernicious inflation environment, bank capital is poised to shrink as a percentage of the bank balance sheet significantly, because loan demand, loan size will go up and up and up as the assets that support them inflate, but the bank capital is not going up. So I think it's an existential question over the next 3, 5, 7, 10 years. And the banks that crack the code first to get some of their reserves into Bitcoin, or for that matter, gold or other assets that are poised to outperform under inflation, but especially Bitcoin, will be way, way, way better off. And then there's another question in the chat about the Bitbonds proposal. And I can give you a sneak peek, which is that later on today, I think, or maybe tomorrow, Bitcoin Magazine is going to release a little podcast where we go into a lot of detail on the proposal. Bitcoin Policy Institute released a white paper about 2 weeks ago going into detail on the proposal. But I would say it's really a matter of shoe leather in a democratic sense. And what does that mean? That literally means just picking up the phone and calling the Washington extension for your own congressman and for your 2 senators and tell them that you really want them to sign on as a co-sponsor of the Bitcoin Act of 2025. And not only do you want them to do that, but you want someone to call you back and explain to you what the congressman's position is on the Bitcoin Act of 2025 or the senator's position on the Bitcoin Act of 2025. And in the end, I think that there's a lot of momentum that people can do. It's way better to call than it is to send an email. An email just goes into the ether. A call, they have to deal with. So give them a call. If you're in Washington, knock on the door. The doors are actually unlocked. Just enter. Say, hey, I'm here to talk to you about this Bitcoin thing. We want you to do this Bitbonds. It's a good path to lower the interest rate, pay off the debt, and put a really good savings tool in the hands of American families.
Bingo. All right. Well, I think we got to wrap it there. Thank you, Matt. Thank you, Andrew. A lot of creativity, fast moving environment. Institutional adoption is going higher, and it's been a lot of fun. Thanks for
Thank you.
taking the time. Appreciate it.
Thanks, everybody.
Thank
you
you,
guys.
Matt. Have a great day, everyone. Thank you.